When you reach RMD age, your financial institution, also called a brokerage firm, will calculate your RMDs for you. So you really don't need to worry about doing your calculations because your institution is going to do it. But it's good to understand how these are calculated and look at maybe projecting what your calculations will be in the future so it can help you decide how you want to save your money that you're taking out in your RMDs. And on our site, we have a couple methods here that will guide you, a couple additional resources that will help you do this. And one that I really like is calculate your RMD. So you just click on this link and you will scroll down and you will see your calculations. So you will put in your date, the amount of money in your tax deferred account or IRA. And if you are doing this with a spouse, put your spouse down and your spouse's date. And as soon as you put this money in, it already calculates it. It knows what your life expectancy factor is, and it divides that into that number, and it gives you this number. So you have $20,000 and $325 that you will owe. What I like is if you scroll down here, this is where it gets really powerful. You make a selection. I like to see estimated lifetime projections. And it immediately makes a chart on how your projections will go over your lifetime. And if you look up here, it says estimated rate return. Now that's kind of 6% might be high unless you're in an aggressive portfolio and the markets are doing well. But as we age, we like to be a little more conservative. So I'm going to push this down to 5%. Maybe even 4% if you want. What the heck. And you can see what your ages will be, and you can see if you're starting with 500,000, what your distributions will be over this time. And you can see eventually you are going to run out of money before. Now, what I like about this also is you can actually click here and download this into a CSV file, which could be imported into an Excel file. So let me show you what that would look like. So you download a file, and you see it puts it right into an Excel file once you open it up, and you could just expand some of these columns. And now if you want to do some of your own calculations, but you can easily project what your income would be in your future years if you're just taking out RMDs. There's also another calculator here that does pretty much the same thing. I just included that in case one calculator goes down, you have another. And let me show you that one real quick. And you can see it's pretty much the same thing. It has a little similar chart, but everything's on one page. But I like this. It gives a table very quickly on your distribution period, your RMDs you got to take out, and the end of your balance. So this is a pretty useful one also. And down here, just to show you where these uniform lifetime tables come from, you can see it comes from publication 590. We have a link right to it. You click on this link, and you need to scroll all the way down to pretty much the bottom. It's the very lengthy file. But you can see right here is the uniform lifetime table. And if you look at some of these ages, you can just see there's your distribution period, 90. Now, I made my own little spreadsheet. I use Google Sheets, and I have them in 3 formats. This is the view only, if you just want to look at it, see what it's like. This is the editable online sheet, and if you want to make your own copy, click on this link, you make a copy, but you must have a Google account because you'll be saving that file in your Google Drive. But let's look at it right here, the editable one, and let's see what information we have there. Here I have the sheet. I have some information up here. Some of this is very useful information. You might want to look it over. It goes over some of the things we discussed in the lesson. But down here it talks about how you can aggregate some of your tax defer accounts. For example, all the IRAs could be aggregated, but not with the 403Bs. All the 403Bs can be aggregated, added up together. But if you have 401Ks or 457s, those all need to be done individually. You can look this over. But the way I would like you to look at this is there are two sections here where you can actually change the data. Anywhere where there's beige, you can add in some numbers. And I did this already. You just click on here and you could change that date. So let's say you're going to turn 73 in 2028. So it looks in the future. It automatically gives you the distribution period or the life expectancy factor. And if you put in the amount of monies you have in your IRA or 403B, it will automatically calculate your RMDs for that year. But one of the things that this table does, in addition to some of the other RMD calculators, it shows you their estimated percentage for each of these periods. Because, you got the factor, but you don't really understand what that is. You just divide it into your income from the previous year, your tax defer amount from the previous year, but what percent is? So if you're 73, you're withdrawing 3.77%. And as you age, you can see that increases. And as you get older, it really starts increasing. Will help give you a feel of what's really being taken out of your tax deferred accounts. Now, if you really like that Google Sheet and you want to make your own copy, just go over to here and make a copy. You click on that, and you would just make a copy of that file. It will appear in your own Google Drive, and then you can play with it and do whatever you want.